as we have discussed, every stock, be it for short term, be it for long term, whether you are analyzing under daily time frame or weekly time frame, always involves a life cycle, right? Every company has an entire life cycle. It will be in the starting stage, which is a pioneering stage or a stage one. It further goes into stage two, which is advancing stage or growth stage, and then into the consolidation stage or stage 3, and last will be decline stage, right? Stage 4. So in this discussion we will be learning what are the key concepts or key learnings from this stage analysis and what we should remember. We will discuss. Okay, we will discuss. So let me share my screen and let's discuss on key learnings of stage analysis. First of all, whenever you look at the market, right, either you look to invest into a company in short term or under long term, right? If you are investing for short term, all those charts should be looked under daily chart. And yes, if a stock is trending for a short term on a daily chart, more up days on increased volume than down days on volume, which means, sir, I'm investing into a stock for swing trading, or I'm investing into a company so that I hold this company for short term, maybe for a couple of days, 1 week or 2 weeks, right? For all those companies, you should see the number of up days are more. What do you mean by up days, right? Every stock will have a zigzag movement. It's not that every day it will advance in price. It will have some down days also. For a stock to be in the exact trend, whenever it is increasing than the decreasing days, the number of increasing or up days should be more and should come up with a more volume. Means buyers are more. Similarly, you are looking at a long-term pick on a weekly chart, more up weeks on increased volume than down weeks on volume, right? Up weeks means the candles, every candle, when you are looking under weekly chart, should be increasing, right? A proper green candle should be formed, right? So for short term, on a daily chart, more up days than down days with higher volumes, and on weekly chart, more up weeks than down weeks with a higher volume. Second, good up move in volume trend, right? So any position, any stock you see, we can clearly identify from the volume which is there below your chart, which is also an indicator. You load that indicator, volume indicator. When a good up move is happening with a strong volume, this is the entry stage for institutions, right? Your domestic institutional investors or foreign institutional investors, this is the reflection that they're getting more stronger, right? So DIIs, you have all of your mutual fund companies, your domestic institutional investors, right? Any big corporates or institutions within India. FII, foreign institutional investors, wherein any big players, some outside money is coming into, right? Some foreign money is coming into, that is a reflection of FII, right? So volume plays a very important role. Third, one of the most important factor to understand is trend, right? Every one of you in your notes or in front of your desk, wherever you sit, wherever you spend most of your time, you have to write trend is your friend, right? Yes. Whenever we have a trending market, you should take advantage out of it, right? You should take advantage out of it. So trend should always be in your direction, right? It should always be in your direction. Now, I'll just give you a couple of examples, right? I'll just give you a couple of examples. Yesterday, right, we had a trending market, right? Yesterday we had a trending market where the market was positive and we see a very good up move. Apart from that, if you see with the stocks examples, right, whatever we have discussed, these 3 pointers, right, in our presentation, if you see, yes, BSE Limited is in a good uptrend in a daily. The number of up days are more than down days. And also you see the kind of volumes yes, a very good volumes that is picking up, right? So number of up days are more than down days, and also the volume has been great, right? Up days are more and volumes are also decent. Second, when this company is in a good trend, which trend it is? In an uptrend, right? In an uptrend. So as we say, trend is your friend. You have to take advantage of it. Even market couple of weeks before is not too positive or is not too conducive in nature. But yes, as the stock is in a trend, we have to follow this stock more. Even CDSL, if you see, right, it's in a good trend. Even when we saw a very good trend for a couple of days, even if it is sideways, one day is enough to pull back, right? Even if you see latest Aarti Industries, slowly it is picking up strength, right? Slowly it is picking up strength. Even under weekly, if you see the kind of a breakout with which it is present at around 560 levels, right? It's coming out with a good trend. So always trend should be in your direction, right? In a trending market, which is right now, even if this, if you see overall nifty levels also, when it is crossing around 20,000, this is the scenario wherein we be little bit aggressive, right? Little bit aggressive. And even yes, few more observation in the market where price and volume is coming stronger, we will be there in the market. And this is the time where you should be beware or cautious. I know many of the investors or many of the beginners, right, just starting their journey, they will be more attracted to serial gappers, right? Serial gap up or gap down, right? Gap up or gap down. Sir, yes, the stock is continuously hitting upper circuit, right? Every day it is touching 5% or every day it is touching 10%. These kind of stocks, be very, very cautious. If the stock is continuously giving gap up, there are chances that it will go into a gap down kind of a mode also, right? So even though you take a position, you take less position and be very cautious while exiting. And the biggest problem is I've seen a number of investors and traders in gap up kind of a stocks, they make some 20%, 30%, 40% profit. But when they be in the gap down, when they start falling, they do not have a provision to exit also. Because if you want to exit, if you want to sell, you need to find a buyer. If there are no buyers, you can't sell. Most of these serial gappers, the companies which continuously hit upper circuits, or every day it is opening up 5% up, 10% up, it is mostly because of insiders, right? Until and unless you track the company, you have a strong information about the management, you know what is happening, then only enter. Else, reduce your position, or someone who are like complete beginners, stay away of these gappers, right? Gap up kind of a positions. Even though you are there, you're getting some good profit. Whenever you see some decline, be ready or be first to come out of it, right? Be first to come out of it, right? There are many companies which I can quote. And next, do not fall in love with the stocks, right? I would say date the stocks, which means, sir, yes, a company has given me 50, 60% returns. It has started some reversal, or it has started to lose strength, right? It has started to lose strength, or it is in a gap down. I've already made 60, 70% profit, right? I've already made 60, 70% profit. I think it will rebound. It will be back. Do not fall in love with the stocks. If you see some weakness, reduce the position, or even if you feel it's good to exit that stock. It's completely fine, right? It is completely fine, because you always get re-entry. As I always say, when you have exited a stock, it means that you do not forget about the company forever, right? You can track it. When again you get a re-entry opportunity, you will again enter. But there are people who get married with the stocks. Sir, I'm working in this company, right? I know a huge information about that company. So even that is continuously falling, I'll be there, right? Even Gland Pharma, is one of the example. Couple of weeks, couple of quarters before, when it has started downfall in the declining phase, there were many people who were there, sir. The order book, the projects are huge. So I know this company can revive, right? Instead of that, exit. And when you see, even right now, in the present days, it is slowly picking up its strength, right? It is able to cross its key resistance levels. So at this levels, when it is picking up strength, you can again focus, but not during the downfall. It's okay to exit your winner if the exit is triggered, right? If the exit is triggered. And gone are the days wherein you hold a company forever, right? No. Gone are the days where you hold a company forever, right? You should have an exit criteria, be it on a weekly or be it on a daily, have an exit criteria, okay? And now coming to the technical part of it, right? I hope everyone remembered about the stage analysis. And when we speak about the stage 1, also called as early phase, or it is also called as pioneering phase, which means the initial stage with which the company picks up strength, right? Second, we have stage 2, which is the advancing or growth stage. And this is where we would love to be in, right? And in this stage, which is advancing or growth stage, more money is made during this stage, right? Yeah, more money is made during this stage. And if you see like stocks like BSC or even CDSL, from the last couple of weeks, it is in stage 2. And that is the reason during the stage 2, during this advancing stage, we increase our positions, right? We increase our positions and we take maximum benefit out of it, because our mantra is very clear. Our rule in the market is very clear. When we win big. When we lose and we get out of the position as early as possible, right? Win big, lose less. Simple criteria, right? Simple criteria. And stage 3 is where consolidation phase, it's also called as sideways phase. And stage 4 is the declining phase, right? Falling stocks, bearish zone. We come out of it as early as possible, right? As early as possible. And what did I tell you? The mantra is win big. And if you are losing, lose less, right? Win big, lose less. So it's okay if you have taken a wrong trade, try to get out of it ASAP, as soon as possible, right? More money is made in stage 2. Stage 4 is where the money is lost. So we need to get out of it as early as possible. Stage 3 is the stage where we become more cautious. We look at it, if stage 4 is starting, we'll be ready to exit out of the company. And lastly, yes, volatility index, VIX, nowadays, even for the last couple of months or last couple of quarters, have been at a very, very decent levels. Yeah, it is at a very decent levels, wherein if you see volatility index, right? VIX, India VIX, right? You go to the stock, right? Wherever you load, right? Wherever you load your stocks or sectors, you just select India VIX in the symbol search. In trading view, you load India VIX, and when VIX is between 10 to 16, it's a low volatile market. 16 to 20 medium, and right now we are at around 12 to 12.3 levels India VIX, right? And if it is more than 20, a highly volatile market, we will be more cautious, right? And any positions, if you're taking for short term, India VIX will give you a very good understanding of where you should be more cautious. And lastly, before concluding this discussion, let me tell you something where you need to delete, or certain things which you should not do. Avoid FOMO, fear of missing out, right? And stock market is a regret machine. Sir, what do you mean by that? I know there are a lot of members, even in this live discussion, sir, I missed certain positions, or I have not been able to enter into these stocks. I was late. right? I was late, or I missed this entire bull run, right? There will be multiple companies like that, right? One person may find a company like BSC, another person may find a company like Polycab, another person can find a company like Varun Beverages Limited, right? Cholamandalam Investments, KEI Industries, right? Phenolics Cables. So everyone will have few winners in your portfolio, right? So if you have missed an opportunity, do not regret, because stock market is a place for regret, right? You'll have that regret. So always be optimistic. There are multiple opportunities you will be getting as we move forward, right? Any case you have missed or any company you have missed where it's not in your portfolio, just analyze the pattern. How did it move? How did it behave in this market, right? If you understand the pattern, that will be reflecting in the next position what you identify, right? So do not regret for not entering into any position, and just come out of old system of thinking. If you have been in a situation wherein, like, sir, I've been always averaging down companies, I've been investing into the companies which are falling down, I used to add more. Change that process. I know it's difficult, but try to change it. Never average down, right? You should never average down. Sir, what is the reason? I would not love to catch a falling knife, right? Never catch a falling knife. If you catch a falling knife, you will bleed. Similarly, if you catch a falling stock, your portfolio will bleed, right? So accordingly, you have to take a decision, right? And even, yes, stay out of negative people, guys, right? Stay out of negative people. As I always say, you are one with whom you are associated with 5 people in a day, right? See what is that, as in the last day or even last couple of days, with whom you are spending majority of your hours in a day. Just see 5 people, right? If they are negative people, and if they are like, they always feel they can't do anything, or if they are losers, or if they feel I'm not fit for anything, gradually you also become one of them. But if you're associated, if you're surrounded with strong people, with active, action-oriented people, you grow, right? Avoid negative people. Get rid of unwanted apps or unwanted notifications. And that's why I say I'm a person who have stopped watching news a couple of years back, 5 years, 10 years. I've just stopped watching it. Anything I wanted to know, I spend 15 minutes, 30 minutes. I just check in a online portal, or I take my newspaper and I read it. Just dedicated half an hour. I don't have any apps on news, anything like that. Get rid of all the unwanted notifications, unwanted apps, right? Declutter yourself, right? By ensuring you declutter from multiple things. People do multiple things at a time, right? As I always say, focus. FOCUS. There is a meaning for it, right? Follow one course until succeed, right? If you look at multiple things on social media, multiple things in YouTube, right? Follow here, there, everywhere, you get confused, right? Do one thing very, very focusedly. And always tell yourself, I am a great investor, right? There are many people who say, sir, I think I cannot identify, right? I cannot identify strong companies. I'm not good in charts. I cannot follow the technical discussion, right? I'm not a very, very good investor in stock market, right? I'm not a very, very good investor in stock market. Whatever you tell your inner self, there is a self, you, and there is something inner self. Whatever you feed, whatever you tell your inner self, it behaves accordingly. That comes as the output. That's why the main reason I do affirmations is I'm sure everyone will be succeeding, and I have confidence on you. Just that you have to be positive. You have to affirm yourself positively, right? So always call yourself as a great investor. And if you call yourself as a great investor, a world-class investor, behave as a world-class investor, right? Do not randomly, or do not just blindly go and believe any of the tips, recommendations like that. Just apply your process and keep learning. A great investor, a world-class investor will always focus on being a learner, right? Even one of the greatest learners in the world, right? Mr. Warren Buffett, Mr. Charlie Munger, right? The chairman of Berkshire Hathaway, the vice chairman of Berkshire Hathaway, right? Mr. Munger, they are like continuous learners. And even, yes, unfortunately, Mr. Charlie Munger at the age of 99, right? Yesterday he has passed away. That is a great loss for all the investors and traders worldwide. If someone do not know about Charlie Munger, just go Google about him, right? Wonderful teaching, wonderful learning. He is a lifelong learner and he has become so successful because he always believed he's a great investor and always kept himself learning, and he has grown in his life, right? So yes, these are the key learnings of the stage analysis. And I always say stock market is not a difficult place to invest or a difficult place to trade. It's just that simple process, simple system, keeping your things very easy can make things great for you, right? Can make things great for you. Okay.